I've studied thousands of hours of ICT concepts. I fully went down the ICT rabbit hole, and after years of chart time and trial and error, I've distilled all of these teachings down into an extremely simple and effective framework for profitability. So if you're an unprofitable ICT trader, then this video is for you, because today I'm going to teach you what will actually move the needle and make you a profitable trader. The number one most important ICT concept is draw on liquidity. This forms the foundation of why you should even consider taking a trade in the first place. If there is no clear draw on liquidity, you should not be taking a trade. Without this condition met, there is literally nothing to do. Draw on liquidity is essentially the understanding that price is always drawing to one of two things. It's either drawing to one, imbalances, or two, liquidity. So imbalances or fair value gaps are often referred to as internal range liquidity or IRL. Internal range liquidity is essentially an area of imbalance that price may want to retrace to. So when price is seeking IRL, it's offering fair value. Next, we have price seeking liquidity or swing points. This is often referred to as external range liquidity or ERL, and this is simply just the liquidity resting at the swing points on the exterior of a range. So when price is reaching for ERL or external range liquidity, it is considered seeking liquidity. It is extremely important to understand whether price is offering fair value or seeking liquidity on whatever time frame you're looking at. The second most important ICT concept is market maker models or MMXM. Market maker models emphasize the logic of smart money and where they're pairing and mitigating their orders. MMXM and its framework ties perfectly into draw on liquidity. When you have a clear IRL to ERL draw or an ERL to IRL draw, this creates a high probability trading environment for you to look to operate within. I personally prefer to take my entries at the low risk stage with a stop loss covering that protected swing low or high. The third and final concept that you need to master is SMT. SMT is defined as a cracking correlation between correlated assets. SMT is essentially a hat tip towards smart money involvement. When you see SMT being created at key levels like IRL and ERL, you know that there's institutional sponsorship within price. SMT is an absolute cheat code when paired with the aforementioned concepts. So when you have a proper understanding around draw, narrative, MMXM, etc., that is when SMT is at its best. The easiest way to spot SMT is by identifying a failure swing between one of the two correlated assets at a key level. So you can see in the example right here, micro NASDAQ tags that weekly fair value gap, creating a higher high, whereas micro S&P 500, MES, fails to tag that weekly fair value gap and fails to create a higher high. This is our bearish failure swing, our bearish SMT. It indicates relative weakness on the S&P 500, smart money involvement with price, and it just validates our internal range liquidity. So I highly recommend once you've mastered draw on liquidity and market maker models to pair SMT with those two. This will drastically increase your win rate and position you on the right side of the markets. ICT concepts are great, they're amazing, but the reality is profitability as a trader goes much, much deeper than just technical analysis. And I would actually argue that TA is just the tip of the iceberg. If you don't have psychology, risk management, and discipline on lock, you're never going to be profitable with simply TA. So in other words, you can be the best ICT trader in the world in terms of understanding the TA and understanding his concepts, but if you don't have everything else on lock, you will simply never be profitable. So I would implore you all to really focus on your trading psychology, your discipline, and your money management. Because if you can't adhere to your ICT model, if you don't have the proper trading psychology to trade that model and you're not managing your money well, then you're just simply not going to make money with these concepts no matter how much you master them. ICT concepts provide a technical edge, but the reality is trading just goes so much deeper. And the sad truth is many traders have a technical edge, but they just don't embody a trader that can be consistently profitable with it. I believe edge goes much deeper than just TA. My ability to sit on my hands, my ability to trade my model with the utmost discipline is an edge. The nuances, my understanding of price, the relationship that I've built with price action, that is an edge in itself, right? So all these ICT concepts put aside, I embody a person that can trade profitably. I embody the edge myself as a trader. And I think that's very, very important to understand. If you take anything from this video, please let it be that. That being said, the concepts listed within this video can 100% form a sharp technical edge, and you can form that into a personal model for yourself. These concepts are literally the foundation of my personal model, Harmony, which I use to trade every single day. So if you want to learn my model, Harmony, and live trade with me for free, I offer a 7-day free trial to the Academy. You can click the link right at the top of the description and check that out right now. The last thing I just want to mention is I've already created and uploaded full in-depth videos on the concepts that I mentioned in this video today. So if you want to go check that out, I'll link those right down below in the description. Thanks for watching the video. If you like this video, definitely go check out the video that I made on drawn liquidity right here. It is literally the most important ICT concept and you need to master it.